Hello everyone. Welcome to another episode of Chain News Analysis. In today's episode, we'll explore the latest developments in the crypto world, from price fluctuations of major cryptocurrencies to the latest regulatory developments and the latest actions of industry leaders, striving to provide you with the most valuable insights and interpretations. First, let's focus on the big news surrounding Ethereum. Driven by market optimism, Ethereum broke through the $4,000 mark for the first time in 8 months, climbing to $4,200 at one point. This strong rally was partially attributed to a massive liquidation of Ethereum short positions, with $207 million worth of short positions forced liquidated in just 1 hour. As one analyst put it, when shorts are crushed, the market's upward momentum becomes exceptionally strong. Notably, this rebound reflects not only Ethereum's own momentum, but also a surge in on-chain transaction volume. This suggests that DeFi and stablecoin transfer activity is rapidly recovering as network capacity increases and transaction costs decrease. Behind the surge in Ethereum's value, we see a new trend emerging. Institutional capital is becoming the new game in DeFi. Reports indicate that a new group of Ethereum treasury companies is quietly emerging. These companies are actively raising funds, purchasing large amounts of Ethereum, and planning to earn returns through staking and DeFi, seemingly fueling the arrival of DeFi Summer 2.0. For example, BitMine's latest acquisition brings its Ethereum holdings to nearly $5 billion. These companies are seeking to leverage the competitive advantages of Ethereum's native infrastructure to generate returns for shareholders far exceeding those achieved in traditional finance. Some companies even view staking returns as a risk-free rate and hope to achieve returns between 8% and 14% through more complex DeFi strategies. Next, let's take a look at the latest developments in major cryptocurrencies and markets. Driven by Ethereum, Bitcoin also briefly climbed to around $122,000. However, a noteworthy on-chain data shows that the ratio of Bitcoin's futures to spot trading volume has fallen to its lowest level since October 2022. This suggests that the current rally is primarily driven by spot demand, rather than highly leveraged speculation. Some analysts believe this compression in volatility often signals an impending major price breakout. Meanwhile, the price fluctuations have also led to the emergence of a new CME, Chicago Mercantile Exchange, GAP, with many traders closely watching to see if the price will fall back to around $117,000 to fill it. Dogecoin Doge, a representative meme coin, experienced a rapid decline after a frenzied rally. Its price plummeted nearly 7% in just one day, from 24 cents to around 22 cents. This high-volume sell-off was accompanied by widespread market concerns. Doge's dramatic volatility serves as another reminder that while the memecoin market offers numerous speculative opportunities, it also carries significant risks. Its price is significantly influenced by sentiment and external events, lacking strong fundamental support. Investors should exercise extreme caution when investing in these assets, strictly manage their positions, and avoid blindly chasing rising and falling prices. The Layer 0 Foundation, a giant in cross-chain infrastructure, has proposed a bold integration plan, acquiring the Stargate protocol and integrating its token economy into Layer 0's Zero ecosystem. The plan aims to completely phase out STG tokens by converting all STG tokens into ZRO at a fixed ratio. The Layer 0 Foundation believes this move will streamline governance, eliminate protocol overlap, and concentrate value into a single token, thereby enhancing network effects for the combined platform. However, early community reaction has been mixed, with some Stargate token holders arguing that the exchange rate undervalues their tokens relative to their historical highs and current returns. Next, we'll focus on regulatory and policy developments. In the DeFi space, S&P Global Ratings achieved a landmark credit rating for the stablecoin liabilities of Sky Protocol, a decentralized finance protocol, for the first time, assigning a B- rating with a stable outlook. This marks the beginning of the extension of traditional finance's assessment framework to the on-chain world. Although Sky Protocol's rating is speculative grade, comparable to the sovereign debt of the Republic of Congo, S&P's move introduces standardized risk measurement for DeFi assets, which will impact the pricing of DeFi returns in the future and potentially pave the way for more regulated institutional capital to enter the DeFi market. Despite the U.S. government's crypto-friendly signals, according to the CEO of a Web3 company, debanking of crypto companies continues to occur. Some major banks are stifling competition from crypto and fintech companies by raising fees or directly cutting services, a practice some industry insiders have dubbed Choke Point 3.0. This demonstrates that even with positive policy changes, resistance and competition within the traditional financial system persist, and crypto companies still face significant challenges in compliance and banking services. A highly anticipated crypto case is nearing its conclusion. Terraform Labs co-founder Do Kwon is expected to plead guilty in federal court on August 12 to a $40 billion fraud case. This plea will end a months-long legal battle and bring closure to the case that triggered the 2022 crypto market crash. Kwon's guilty plea will undoubtedly have a complex impact on investor confidence in the crypto market. On one hand, it represents justice, but on the other, it may also trigger a re-examination of the significant risks within the crypto ecosystem. Next, let's look at the latest developments of some institutions and projects. Cryptocurrency exchange Bullish is seeking an IPO and has attracted interest from traditional financial giants BlackRock and ARK Invest. The company plans to issue additional shares at a valuation of $4.8 billion and has received subscription intentions totaling $200 million from BlackRock and ARK Invest. This move demonstrates that, amid the crypto market's recovery and the increasingly clear regulatory framework, more crypto companies are actively seeking to enter traditional financial markets to attract a wider investor base. Tether, the world's largest stablecoin issuer, is pursuing a strategic transformation. The company plans to become the largest shareholder in video sharing platform Rumble. Tether will exchange its stake in Northern Data, an AI and high-performance computing infrastructure provider, for shares in Rumble. This transaction will give Tether significant influence in the AI and cloud computing sectors and demonstrates that the stablecoin giant is expanding its reach beyond Web3 financial infrastructure into emerging technology areas. Block Incorporated, the fintech company founded by Jack Dorsey, released its second quarter financial report. The report showed that the company's gross profit increased 14% year-over-year to $2.54 billion in the second quarter. However, it's worth noting that due to the decline in the fair value of its Bitcoin holdings, the company recorded a $212 million loss on its Bitcoin investment during the same period. This serves as a reminder that even tech giants face the risk of price volatility with their Bitcoin investments. A disturbing trend is spreading in the crypto world. Physical attacks against Bitcoin holders, known as wrench attacks, are increasing dramatically. According to a warning from a crypto executive, at least one Bitcoin holder is kidnapped each week, some even losing their lives for small amounts of money. These attacks are closely correlated with Bitcoin price increases, and data breaches make it easier for criminals to find their targets. This reminds us that the security of crypto assets isn't just a digital issue, it also involves physical safety in real life. Thank you for listening to this episode of Chain News Analysis. See you next time.